What's going on, guys? This is Chandler Smith, and inflation has gone wild. And in today's video, I'm gonna share with you what I think this means for real estate investors, wholesalers, realtors, and everyone else that's involved in any and all things real estate. So with all of that being said, let's jump into it. All right, guys, if you're new to the channel, I've been investing in real estate for the last 9+ years. I currently own over 180 units of residential real estate. I also own a couple storage unit complexes, and I'm constantly watching the market and inflation and a myriad of other things so I can determine the next best move for me and my real estate portfolio, my family, and everything above. I also do this channel so that I can hopefully help you invest in real estate properly. Now, today's video is going to be very interesting, unique, terrifying, exciting. It really can be summed up by just one word, and I'm gonna turn it over to Joe.
I was gonna excuse me.
If you missed it, what Joe was trying to say is inflation. And this should be the one word on Joe's mind because this is the worst inflation since 1981. Now, I'm not so foolish as to put all of the responsibility on Joe. As a matter of fact, I don't know what responsibility should be put on Joe.
When they need to bring.
But I do know that inflation has gone absolutely mad, and if I was the president, I'd be a little bit stressed out about it. Now, in past videos, I've talked about the benefits of inflation if you are a real estate investor. However, I do want to be very clear in the fact that when inflation goes this crazy, there aren't really any winners. Now, you can find a way to have wins, but overall, crazy inflation causes lots of issues and lots of problems for everyone. The last statistic that was just released said that they believe that inflation has increased by 9.1% since June last year.
700 billion and $1.3 billion.
And in my opinion, I believe that their estimates are even on the low side. Now, this is no surprise to the average person as they look at food costs, as they look at gas costs, as they look at building costs, as they look at literally anything in our world that can be purchased. The price has gone up a lot. And I know a lot of the people that are watching this channel are coming to see what they should do next, whether they're a new real estate investor, whether they currently have real estate. And so I'm going to do my best to give you my guesstimates on what this is going to mean over the next 1 to 5 to 10 years for real estate investors, wholesalers, realtors, BRRRR investors, and everyone else under the sun. The only thing that I ask you to do is remember to smash the like button, subscribe to the channel, and hit the little bell. It's not that hard, you just push the little button. Thanks, guys.
Come on, man.
Now, I don't want to get political at all on my channel unless I want to, which right now I don't want to. I will say this, extreme government spending is never going to help inflation. That's my opinion, I'm sticking to it. I would also argue that the extreme spending that has happened may be kind of the cause of it, but we're just gonna leave that where it lies.
Anyway.
What I do know is that inflation has gone absolutely crazy, and there are a lot of implications that come with that. First off, you're seeing the majority of these just in what you have to spend on a daily basis for everything. If you're a real estate investor, where you really feel this is interest rates. Interest rates have gone absolutely crazy. I mean, we've had a massive increase where this time last year, you could jump into a home at 2.5%, 3% on your interest rates. At this point, you're above 6%. And here's the news that I've got for you that actually is a major bummer. After this report has come back, I can almost guarantee that the Fed is going to come back and interest rates are going to go up another 0.75%, if not a whole percent in the very near future. And I think that's just the beginning of the rate increases that we're going to see over the next year. This means for those people that are trying to get into a home after years of prices going up in value like crazy, a lot of sellers are not wanting to bend on their prices yet, but a lot of buyers have lost a ton of buying power. And so they've been completely knocked off when it comes to being a potential buyer because they don't have the buying power like they used to. This also makes it extremely hard as a real estate investor to make your numbers work if you're purchasing based on comparables that we've seen over the last year. If you went to go and buy a fourplex with these interest rates that you would have bought 6 months ago with lower interest rates, and they're wanting the same or most likely a higher price for that property, it's almost impossible to find properties on the MLS that make sense, because you've got these sellers that they still want to sell for a premium because they know what stuff is sold for, but they're also watching these interest rates go crazy, and investors, if they're smart at all, are not going to pay this premium. So here's what I think this means for investors. I believe that certain sellers will recognize how much interest rates have gone up, and they will begin to lower prices. I think we have to see prices lowering, and that's kind of the point of increasing rates, is to kind of hedge the crazy inflation that's going on right now. I think you'll also see some sellers that will just hold and then end up chasing the market as it does start to correct and get nowhere near what they were hoping to get on their properties. I think there are also a bunch of investors that may have considered selling that now might just sit on those properties. I think a lot of buyers are going to get cold feet because they just can't make the numbers work. And this is going to cause them to either negotiate better deals where the seller bends, or it's going to cause them to not really have deals because with the current interest rates, it just is very hard to make it make sense. I also think that we're going to see inventory go up like crazy because a lot less buyers are going to be able to be buyers, and they're not going to be purchasing real estate at the prices that we've seen. This is also going to leave a lot more people renting or being forced into renting, which should, in my opinion, increase rents. Now, a lot of people will say, hey, I don't think that they're going to be able to afford these crazy rents. They've already got out of hand. Well, when you look at California compared to Idaho, their rents are so much higher. I mean, we're talking double for a 1-bedroom, 2-bedroom, 3-bedroom apartment. And yet people there that are working on minimum wage, they still find a way to get housing somehow, whether that's getting roommates. I don't know how they do it, but I think people are going to continue to find a way to pay rent. I also think that we have to see wages increase. Now, wages are usually a little slow when it comes to inflation impacting everything else and then wages starting to creep up, but there's no way we can't see wages increase with the insane inflation that we've seen. I also talked to tons of business, at least in my local area, and it's really, really hard to find workers right now. And so when it's hard to find workers and everything is way more expensive, I don't see any way for wages to stay where they're at. I think we have to see those increase, and probably increase at a pretty drastic amount over the next 1 to 2 years. So if you're a real estate investor looking to buy, it's probably gonna be a little more difficult to find deals. It doesn't mean that you can't find them, especially if you're doing seller financing offers or you're taking over the existing loan. There's still lots of opportunities there. When it comes to getting a bank loan, it's gonna become a lot more difficult to structure a deal with where the seller wants to be on price and where will actually work for you if you're using debt. Now, let's talk about some other people. If you are a flipper, I think we're gonna see a lot of flippers have some major issues over the next couple of years. And maybe not even the next couple of years, but especially the next year, because as interest rates go up, it's going to be more difficult to get hard money. Hard money should increase as well. And you're going to have a lot of properties that are purchased where in the past, people would make mistakes and they were bailed out by an aggressive market of properties going up in value, where bad flippers are not going to be bailed out anymore. And I think a lot of flippers that don't know what they're doing, they're going to find themselves underwater. This could be a potential issue for some wholesalers, depending how they structure their deals. If they do get something and put down money or whatever else, I think there are a lot less worries there. I do think for realtors and for flippers, we might see it be a little more difficult to make the kind of money that they've made over the last little bit. Now, there are lots of realtors that are saying, awesome, it's more of a buyer's market rather than a seller's market, but it's flipping so drastically that I could see it being more on the famine side of things for realtors. I could see a lot of flippers really getting burned because, again, they've been bailed out in the past. Now they buy a property hoping to get a profit, and they own a property that they've put money into that is just not going to be worth what it needs to be worth for them to sell. And they're going to have really crappy interest rates to try and hold it. And so I think it's going to get scary for some flippers if they don't do things right. Same with people who are wanting to use the burst strategy. They're going to go in and hope that they can refinance later after increasing rents. When you're dealing with 4 units or less, a lot of times those refinances are based on comparables, not necessarily what you can get the rents up to. And so I do think there are certain things we can do to get those rents up, but I think it's going to be a little more difficult to get a loan that's going to make it make sense and pull money out if you're using the burst strategy. So that's another thing that I would be extremely careful about. The last piece of this that I want to talk about is vacation rentals. Anytime you head into a recession and have what we've got going on where expenses are going up, you've got to see less travel. And I think we're really going to see that over the next 1 to 2 years. We've also been in a very, wild west situation with vacation rentals where people have been able to make a premium. I just hope those people have been smart and stacked cash and also purchased properties that if they need to rent them because there's no longer an opportunity to use them as a vacation rental as that dries up, that they'll still be able to at least break even and hopefully cash flow a little bit, because if not, I can see a lot of vacation rental setups being very dangerous. I know I have a lot of people where they've got vacation rentals in very random places, and for me, it's hard to determine if that's going to be good and bad. You've got vacation rentals in the very coveted places like, the Hawaiis, the Californias, the Floridas, and I would think those would struggle a lot as well. And then you've got the random off places. I don't know, maybe the random off places, people are still gonna go see family, where the more exotic places, it'll be less, or maybe all of them will have a decline. I don't pretend to be a professional in vacation rentals. I know that I personally have units that I'll switch over, but they're not high-end vacation rentals. They're units that I can very easily flip back and they'll still be cash flow positive if I use them as just regular rentals rather than vacation rentals. Some people have absolutely made it rain. I mean, we're talking crazy returns. I just think that the days of that happening, not only is the market kind of figured it out and a lot of vacation rentals are out on the market, so it is more competitive, but I think we're going to see travel come down quite a bit. I think this is going to be a real slap in the face for a lot of people right now as expenses go up drastically and as your buying power has gone down drastically with debt. I just think we're going to head into a very interesting period where if you are a real estate investor, do everything that you can to get out of your short-term debt. And I know rates are crazy, but they're not gonna come down anytime super soon. So make sure you're getting something locked in. I've always suggested a minimum of 10 years. I do have some debt right now that's on a 5-year, and then I've got a lot of debt that's on 30-year. That's what I would suggest if you're going to do it. Make sure that your numbers work. Do not be one of those investors that's banking on a market like we've seen the last 5 years where every year you've had this massive appreciation, because I think it's really going to level. And I do think in a lot of markets we're going to see a correction because the Fed is being so aggressive with how much they've increased rates, and I think we've just seen the beginning of that.
Wait, you're getting nervous, man.
So those are a lot of the implications that I believe are going to happen in the real estate market as we go into this recession, crazy inflation, substantially higher interest rates. And so it's kind of hard to know what to do now, but if you're in a place where you have a property you're wanting to unload, I would try and do it quickly and maybe even take it at a discount if you need to get rid of it very soon, because I don't see prices continuing to go up. I also believe that if you can lock in rates now, I know they seem bad, but they're going to get worse. Just put yourself in a safe place. If you've got good debt for a minimum of 10 years where you know those payments are locked in and you know you're gonna be able to pay those payments, then you're gonna be in a good place. And for all of you landlords out there that have never lived through this, you're right there with me. I've tried to do as much research as I can. I'm really confident the rents are going to hold or even increase. That for me gives me a lot of comfort, but if they don't, hopefully you bought smart so that even if we do have a 20 to 25% decrease in rents, which I would bet money that doesn't happen, hopefully you're still able to be cash flow positive so that you're not in a dire situation because of the debt you've taken out. It's hilarious on the channel how much flack that I get for one, building my home, and taking on the debt that I have with other things, but especially the massive debt and payments I have on my rental properties. But guys, you got to remember, I've got a very large margin on those rental properties. And I've also tried to put myself in a place with reserves and everything else where even if I wasn't cash flowing on all of my properties, I would still be good to survive for quite a long time. I'm not trying to be a fear monger. I'm just trying to be realistic and give you the best advice that I can. So if you're trying to jump into your first flip or your first burr, be very careful if you do it at all. As a first timer, it's very easy to make mistakes. Also, if you were a first timer last year or the year before and you crushed it because the market bailed you out, make sure you know what you're doing going into this next time period.
I looked at it anyway. That's what I think.
So if you guys enjoyed the video, make sure remember to smash the like button, subscribe to the channel, hit the little bell. And if you're someone that wants to jump into real estate investing, now is the time to do it. You might not find immediate deals, but over the next couple of years, you're gonna wanna know what you're doing. And I've included a link for my real estate investing course down below. And I'm going to share with you everything that I'm doing to work through these weird times. I'll probably even be redoing the redone course to talk about how to handle these higher interest rates. So thanks so much for watching and have a great day.